Hello, financial fans. I purchased two stocks since the last time I spoke with you. I bought PBF and I purchased ARKG, and they both have gone up a nice amount since I bought them. And that's just in the last few days. I will recommend for this coming week to keep your eye on the defense stocks that are related to providing items for the military in one way or another. There are several stocks which might actually be moving upwards because of the need for more defense hardware in the very near future, with trouble in the Middle East and the winds of war blowing there. The stocks that I recommend for those of you who are thinking about getting into the market after you've studied the market for a year and you know how to study stocks, I'll recommend looking at Raytheon Technologies. That's RTX is the symbol, and we can see it right here. It closed at $73.91, and that was on Friday the 27th. And $73.91 is a price. We look down the first column on the left, about a little over halfway down, 52-week range, $43.44 to $2,400. Now that's ridiculous. Something is odd there, but let's look further. The average volume, 8 million shares trade every day, so that means it's an active stock. It's a kind of stock that I would consider buying. The PE ratio on the middle column, about third item down, PE ratio is NA, not available, and the reason is it did not make a earnings, so there's no price earnings ratio since there's no earnings. And the dividend and yield we see is 2.5%, $1.90, and that the 2.5% goes down if the price of the stock goes up, and it goes up if the price goes down, which means they're going to pay $1.90, whether it's for a real high price stock or a low price stock, whatever, they're paying $1.90 a year. And the 1 year target, $76.79, so they're expecting a reasonable growth even without a war. But if there is some sort of war, Raytheon is one of those stocks that is considered to be part of the defense stocks. And I had Raytheon for a long time. I held on to Raytheon for a couple, 3 years perhaps, and sold it, and made more than 100% on my investment back at that time. We'll see what happens this time. But the other defense stock that I will recommend is an ETF, an exchange traded fund. It's symbol ITTA, and that's currently at $189.33 a share. It was down slightly on Friday. And this is a defense fund which has lots of different companies involved in it, and if there is any kind of activity that involves defense issues during this coming week or coming month, then this stock, this exchange traded fund, should go up. The year-to-date total return we see is down 14%. The stock went down this year, did not go up. That's in the middle of the middle column. And the expense ratio, 0.42%, which is very fine. It's low enough, no problem there. But this would be one I would recommend, even though it trades only 183,000 shares per day. I think I would recommend it at least for consideration for the next week or so. The 52-week range, see in the middle of the first column on the left, $112 to $240, so it's got lots of headroom and it could go up nicely. Next stock is Boston Scientific, and the symbol is BSX. We'll see some nice numbers here. $33.60. By the way, these are not defense issues from here on. These are just regular stocks that appear to be in a position where you might consider them if you are planning on buying some stock. $33.60 per share Friday, and the 52-week range $24 to $46. $47 almost, and so it's in the middle, so it's got lots of headroom. And down at the bottom of the column, let's see the average volume, 11 million shares. That's nice. And then down under that, we see that Yahoo thinks this is undervalued. I agree, it's very undervalued in my humble opinion. The PE ratio we see in the middle of the second column, the middle column, PE ratio 12.913. Not bad. I would prefer for it to be 10, but 13 is not bad. The 1 year target estimate, $43.50. If that happens, that is a big move upward for Boston Scientific. Move on to Canadian Natural Resources Limited. This is on the New York Stock Exchange, so don't let the Canadian word trouble you in any way. Canadian National Resources Limited, CNQ. That's the symbol, CNQ. The first column, halfway down, we see a 52-week range, $6.71 to $32.79. So it's got headroom galore. It could move up nicely. The average volume, 3,387,000 shares. And in the second column, we see the PE ratio, 10.41. I like that. And going down farther, we see the dividend. Look at that, 5.41% just for holding on to it. And what that means is they'll keep paying $1.29, and the price might bounce around, which would make the yield, the percentage, go up or down a little bit. But that looks good, and it also is considered to be undervalued by Yahoo. And move on to a very familiar company that's doing the right kind of business right now for anyone who's shut in. This is eBay, and they don't have to pay for brick and mortar stores out there. I'm sure they have warehouses and so on, and even though they don't really handle the merchandise, it's the people with kitchen tables who are selling things to people at kitchen tables. And eBay closed at $51.34, and that was on Friday. And it went up a little bit, it went up a penny after hours. It sounds like some of the sales they have at eBay for 1 cent starting. But look down at the 52-week range, $26.02 to up to $61.06. The average volume, 3,600,000 shares. No, the average volume, excuse me, 9,426,000 shares. That's a lot of shares. That's good. PE ratio, middle of the second column, 7.12. I love that. And this is eBay. This is a big operation. This is something that should have smooth sailing forever. And the forward dividend, barely noticeable, 1.27, but still you're getting something. You're getting a check every once in a while. 1 year target, $62.65. That's good. If it goes anywhere near that from the 51.34, that's quite a move in the right direction. And the last stock I'll look at for this week is being the end of November of 2020. This is Johnson & Johnson, J&J. It's in the pharmaceuticals. It's a good sector to be in at this time. $144 is where it closed, and it went up 27 cents after hours. So it's doing quite well on the day, and as far as the future consideration is concerned. Look down The 52-week range, first column on the left, 52-week range 109 to 157, so it has headroom. Yahoo considers it to be overvalued. The average volume 6,690,000, just make it 6,700,000 shares. That's a lot. That's very good. And Yahoo says they consider it to be overvalued, but 144 is the price today, and they're expecting it to go to 166, one-year target. So that's not overvalued in any way. One-year target, $166. If it comes near there, you made a good chunk of change. Plus, you get the dividend, $4.04, which right now at this price comes out to 2.81%, which is almost 3%, which is a good percentage dividend for these days. And with that in mind, we will wish you very happy trading, and I thank you very much for watching.